Welcome back to Talk Tickers. You know, we always break down earnings calls for you.
That's right. No one wants to listen to those things.
Right. And today, we're deep diving into Markle Group's Q3 2024 report. And I'll be honest, it's not the most uplifting report we've seen.
No, not exactly a celebration this time around.
But we got to understand these things, even when they're not,
Really?
all sunshine and rainbows.
Absolutely. Even when the news isn't all positive, that's when transparency is most important. And Markle, they're always an interesting one.
Yeah, no. I always say Markle's kind of like the rebel of the financial world, right? You got insurance,
Right.
investments, and then there's that whole Markle Ventures thing. It's
like they're not afraid to be different, to go their own way.
it's like a puzzle box
Uh-huh.
every quarter.
And they always keep things interesting, that's for sure.
And this time, they're comparing their performance to an airplane.
The airplane analogy, I love it. It's become their signature.
It really grabbed my attention. So break it down for us. What are the key things the CEO, Tom Gaynor, is focused on?
All right, so first up is speed. And that represents the growth of their total net investments.
Yeah, and it looks like they've been moving pretty fast. 68% growth in the past 5 years.
$30.3 billion.
That's a lot of momentum.
It really is. But of course, speed isn't everything. You got to have fuel to keep going, right?
Right. Can't fly in an empty tank.
Yeah.
So what's their fuel?
So think of their fuel as the operating income from their insurance and that Markle Ventures segment.
Okay. Makes sense. And are they,
Oh, yeah. Both of those have seen some big increases. Like in the last 5 years, insurance is up 84%. And then Markle Ventures is up even more, 117%.
wow, so they're generating a lot of cash.
They are. And that cash flow is what keeps the business running, especially a company like Markle that's in it for the long haul.
Okay, so we've got speed, we've got fuel. What about altitude?
Ugh, good question. Altitude, in their analogy, that's their recurring investment income. So think of it as a steady stream of returns. It's like their base, provides a foundation for growth.
Got it. And that's doing pretty well too, right?
Almost doubled in 5 years, up to $677 million.
Nice. So they're flying high, making good money. But are they going in the right direction?
All right, so now direction is where it gets really interesting. Direction, that represents their share price.
Okay.
And, well, it is up a decent 33% over 5 years, but that's actually their lowest growth metric.
Really? That's surprising, especially given how well everything else is doing.
I know, right? But here's the thing. Gaynor really emphasized that those other metrics, the net investments, the operating income, the recurring income, those are the ones that show you the real value of the company.
So it's like he's saying, don't just look at the share price, look at the bigger picture.
Exactly. He's basically saying, we're building a really strong business for the long term, and the share price will catch up eventually.
So they're focused on, making sure the plane is in tip-top shape, even if it means a slightly slower climb.
Precisely. And it's not just talk. They've been backing it up by buying back their own shares.
Oh, yeah, the share buybacks. Reduced their share count by 6.7% over the last 5 years.
Yep, and that's often a sign of confidence. It's like they're saying, we believe in our company, and we think it's undervalued.
Okay, I like it. So we've got the big picture. Now let's zoom in on those individual segments, starting with insurance, which, is like their bread and butter.
Right, that's their core.
But it sounds like there were some bumps in the road this quarter.
Yeah, there were some challenges. Overall, their combined ratio stayed steady at 95%, which is good.
Right.
But they did get hit by Hurricane Helene. And they're still dealing with losses from their intellectual property collateral protection portfolio. CPI, for short.
Okay, so a few headwinds there.
Yeah.
CPI, that's the one that's in runoff, right?
Yes, exactly.
Can you remind us what that means, runoff?
Basically, they've decided to stop writing new policies for that particular line of business. But they're still, managing the existing ones until they expire.
Right. So it's like they're winding it down slowly.
Exactly. So yeah, insurance had a bit of a mixed bag this quarter.
Some challenges, but also that stability you mentioned.
Yeah, and it's important to remember that insurance, it just naturally comes with some ups and downs. Unexpected stuff happens.
Right.
Like hurricanes. And certain lines of business can become less profitable over time. But the good news is that Markle's catastrophe losses were pretty much what they expected. And they're actively trying to manage their portfolio and make it more profitable.
Okay, that's good to hear. So what kind of things are they doing to manage that portfolio?
Well, for one, their international insurance operations are doing fantastic. And they've also seen what's called favorable development on their prior year loss reserves.
Favorable development.
Haha, I know that sounds a little jargony.
Yeah, a little bit.
What it means is that they basically overestimated how much they'd have to pay out in claims from previous years. So as those claims get settled and they have a clearer picture, they can release some of those reserves back into their earning.
Oh, so it's like finding extra money in the couch cushions, but on a much bigger scale?
Exactly. And it's a good sign. It shows they're being careful with their estimates and managing risk well.
Right. So it's not just about being cautious, it's about being smart about it.
Exactly. And they're also making strategic moves. They're focusing growth in areas like personal lines and international marine and energy, which are doing well. And in areas that aren't performing as well, like U.S. professional liability, they're taking steps to improve profitability.
So it's like they're fine-tuning the engine, making sure everything is running smoothly.
Yeah, exactly. They're constantly adjusting and adapting to make sure their insurance portfolio is as strong as possible.
Got it. Now let's talk about their investment performance, because those numbers were pretty impressive.
Yeah, no doubt. Markle's investment arm is really firing on all cylinders. They reported a net investment gain of $1.7 billion for the year.
Wow.
And a lot of that was driven by their public equity portfolio, which had a return of 18.5%.
That's pretty remarkable. What's the secret to their success?
Remember, they're not chasing those short-term trends or trying to time the market. They're in it for the long haul. Their approach is all about finding those undervalued companies with really solid fundamentals.
They're like those value investors, right? The ones who are patient and disciplined.
Exactly. They're looking for the diamonds in the rough, and they've got a proven track record of success. It really underscores how important their investment arm is to their overall performance.
Yeah, it's definitely a key part of their success story.
Yeah.
Now, before we move on to that more mysterious part of their business, Markle Ventures, I want to touch on something you said earlier about the share price. You mentioned that it was up, but it was lagging behind those other growth metrics.
Right.
It seems like they're really prioritizing building that long-term value, even if it means the share price doesn't skyrocket overnight.
I think you're spot on. It's almost like they're saying, look, we're focused on building a truly valuable business, and we believe the market will eventually recognize that value. It's a refreshing perspective in today's market, which is often so short-sighted.
I agree. It takes a certain level of confidence and a long-term vision to stick to your guns like that. Now, speaking of long-term vision, let's dive into that mysterious world of Markle Ventures. What's going on in this fascinating corner of the Markle empire?
Well, that's where things get really interesting. Markle Ventures is basically a collection of all these different private businesses that they've acquired over the years, everything from building materials and home furnishings to manufacturing and specialized services.
So it's like a mini Berkshire Hathaway tucked away inside Markle.
That's a great way to put it. It's all about diversifying their revenue streams beyond those traditional areas of insurance and public market investments.
Makes sense. Spreading the risk, exploring new opportunities, it's all part of that long-term value creation strategy.
Yeah.
So how did Markle Ventures perform this quarter?
You know, it was a bit of a mixed bag. On the one hand, revenue was up 3%, mainly driven by their consumer and building product segments, so that's a positive sign.
Yeah.
But their operating income dipped slightly, down about 1%, and that was because of some weakness in their construction services and transportation businesses.
Okay, so a little bit of softness in certain areas.
Yeah.
Did they give any insight into what's driving those headwinds?
They did. The CEO actually addressed that head-on during the Q&A portion of the call. He acknowledged that those businesses are cyclical. You know, they're sensitive to the broader economic climate, which we know has been facing some challenges lately. He basically encouraged everyone to look at the 5-year averages for those businesses instead of getting caught up in the short-term fluctuations.
So he's saying, don't panic. This is just a temporary blip.
Exactly. He's emphasizing that long-term perspective again. And, you know, their 5-year track record in Markle Ventures is really strong, suggesting they've been successful at picking and managing these diverse businesses. It's all about riding out those inevitable ups and downs.
All right, so a wait-and-see approach with Markle Ventures for now. Now let's shift our focus to their reinsurance segment. From what I gathered, that's been a bit of a sore spot lately.
Yeah, unfortunately, reinsurance continues to be a bit of a challenge for Markle. They reported a loss ratio near 79%, which is definitely higher than they want it to be.
Oof, that's a tough number. What's contributing to these struggles?
They pointed to a few things. One was their decision to exit the public entity line, which wasn't profitable for them.
Right.
And then they also mentioned some specific loss activity in areas like credit and surety. So it sounds like a combination of internal decisions and just the overall market conditions.
So like a perfect storm, sort of.
Mhm.
How are they navigating these choppy waters?
They're being very cautious, they're increasing loss reserves and keeping a close eye on all the trends. They emphasize the importance of, really careful underwriting and disciplined risk management in this segment. Basically, they're trying to batten down the hatches and weather the storm.
It sounds like they're taking a very prudent approach.
Yeah.
All right, before we wrap up this part of our deep dive, I want to touch on their insurance-linked securities operation, Nephila. It's a bit niche, I know, but they seem to be doing quite well there, despite the industry facing some headwinds.
Yeah, Nephila is a really interesting part of their business, and they are performing well, even with the increased catastrophe activity this year. They're demonstrating some really smart portfolio management.
That's encouraging. Any thoughts on what they expect for Nephila in the coming year?
Well, they said they expect a more favorable pricing environment in 2025, which could lead to higher earnings. So that's definitely something to watch.
All right, well, we've covered a lot of ground here. It seems like Markle Group's Q3 earnings call gave us a bit of a mixed bag, some areas of strength and some areas that need attention.
I think that's a fair assessment. And that's what makes these deep dives so valuable. We get to go beyond the headlines and really understand what's happening.
Absolutely. Now, before we move on to the next part, where we'll do a little more analysis and dig into some of the key trends and themes, let's take a quick pause. We'll be back with more insights into Markle Group's Q3 performance.
It's really interesting how, even with all these challenges they're facing, Markle's still sticking to their long-term plan.
Yeah.
It's not often you see a company prioritize actual value over just trying to pump up their stock price, especially these days.
It's like they're building a real solid business brick by brick, instead of just throwing something together that'll fall apart when things get tough.
Exactly. And their share buyback program, that's a perfect example. Instead of going out and doing some big flashy acquisition or chasing the latest trend, they're steadily buying back their shares.
Yeah. Like they're saying, we know we're worth more than the market thinks.
Exactly. It shows real confidence, and they've actually been doing even more buybacks lately.
Oh, yeah.
Especially when the market dipped back in 22 and 23, they see those dips as opportunities.
Smart move. Buy low, right?
Exactly. Now, remember we were talking about that favorable development on their loss reserves in the insurance segment.
Yeah,
I want to dig into that a little more.
Okay, yeah, that was a little confusing.
Basically, they're being extra cautious with their estimates for potential claims, right?
Like setting aside a big chunk of change just in case.
And sometimes those estimates are higher than the actual costs they end up paying out.
Oh, so it's like they were prepared for a rainy day, but then the sun came out.
Exactly. And when that happens, they can release some of those extra reserves back into their earnings. It's a nice boost to their profits and shows they're managing risk effectively.
It's like finding a 20 in your pocket.
Right. But they're also dealing with some real challenges, like that CPI portfolio we talked about.
Yeah, and those Hurricane Helene losses. How are they handling those?
Well, the CPI portfolio, the one that's in runoff, they're still seeing some losses there, but they think most of it will be resolved by the end of 2025.
So hopefully there's light at the end of the tunnel.
Yeah. And as for the hurricane losses, well, that's just part of the insurance business.
Right, you can't predict the weather.
Exactly. But the good news is that Markle's losses from the hurricane were pretty much what they expected.
So they're factoring those kinds of events into their plans. That's good.
Right. And then there's their international insurance operations, which are actually doing incredibly well.
Yeah, that really stood out to me. It seems like that's a bright spot for them.
Oh, yeah, definitely. They're seeing great performance internationally, both in terms of growth and profitability.
It's all about diversification, isn't it? Not putting all your eggs in one basket.
Exactly. And they're doing a great job of expanding into new markets and offering new products. It's a smart strategy.
Okay, so global expansion is key for their insurance growth. Now, let's talk about their investment approach. That's really what sets Markle apart, right?
Absolutely. They're known for being really savvy investors, and this quarter's results definitely back that up. Remember that 18.5% return on their public equity portfolio?
Yeah.
They're really crushing it. But they're not day traders or anything.
Right. They're in it for the long haul.
Exactly. They find those undervalued companies with solid fundamentals, and they hold on.
Like those treasure hunters who are patiently searching for those hidden gems.
Love that analogy. It's all about discipline and patience. and a deep understanding of what makes a company truly valuable. And their approach is clearly working.
It is. Now, let's turn our attention back to Markle Ventures. That's the part of their business that always seems a little mysterious.
He's definitely unique.
Remind us what it's all about and how it fits into their overall strategy.
So Markle Ventures is basically this collection of private businesses they've acquired over the years. It's their way of diversifying beyond insurance and the stock market.
It's like a separate little ecosystem of businesses all operating under the Markle umbrella, almost like their own venture capital arm.
That's a great way to think about it. And it's a perfect fit with their long-term vision. They're putting their money into businesses they think have the potential to grow, adding another layer of diversification and resilience to their portfolio.
So it's not just diversifying across different types of assets, it's diversifying across different business models too.
Exactly. And remember how their operating income from Markle Ventures was down a bit this quarter?
Yeah, I remember.
Well, some of that was due to weakness in their construction and transportation businesses.
Right, those are sensitive to the economy.
Exactly. And the CEO, Tom Gaynor, made it clear that he sees those as short-term fluctuations. He said to focus on the 5-year averages, not just one quarter.
So don't get caught up in the short-term ups and downs.
Right. And their long-term track record in Markle Ventures is really solid. It suggests they're good at choosing and managing these different businesses.
So we'll just have to wait and see how those businesses perform over the long term.
Exactly. Now let's circle back to their reinsurance segment. That's the area that's been giving them some trouble lately.
Yeah, I want to hear more about what's going on there and how they're planning to turn things around.
Sure. So they're facing some pretty strong headwinds in reinsurance. Remember that loss ratio of almost 79%?
Yeah, that's not good.
They've attributed it to a few things. One was their decision to get out of the public entity line, which just wasn't profitable. And then there's also been some specific loss activity in areas like credit and surety.
So it's a mix of internal and external factors. What are they doing to fix it?
Well, they're definitely being very careful right now, increasing loss reserves and monitoring the market very closely. They talked a lot about the importance of really careful underwriting and managing risk effectively.
Sounds like they're battening down the hatches and getting ready for a rough ride.
Yeah, pretty much. They're taking it seriously, but they're also taking steps to improve their underwriting and risk management for the long term. They're being more selective about the risks they're taking on. They're looking at new business opportunities with a more critical eye, and they're being more cautious with their pricing.
So they're not just reacting to the current problems, they're trying to build a stronger reinsurance business for the future.
Absolutely. And they're also working on making their claims process more efficient. It's all about tightening things up and reducing their exposure to unprofitable risks.
Smart moves. Now, before we wrap things up, let's touch on Nefla again, their insurance-linked securities operation. It seems like they're thriving there, even though the overall industry is facing some challenges.
Yeah, Nefla is a fascinating part of their business. They manage these things called insurance-linked securities, which are basically financial instruments that transfer insurance risk to the capital markets.
So it's like a specialized type of reinsurance.
Exactly. And Nefla has a great reputation in this area. They've been able to generate positive returns this year, even with all the catastrophes that have been happening.
That's pretty impressive. What's their outlook for Nefla in the coming year?
They're expecting the pricing environment to become more favorable in 2025, which could mean even higher earnings.
Interesting. So overall, it seems like Markle Group's Q3 earnings call painted a pretty mixed picture. Some areas of strength, some areas of concern.
Definitely. But one thing that's clear is that this is a company that's focused on the long game.
Yeah. They're not worried about short-term gains or making headlines. They're building a resilient and diversified business for the future.
Exactly. And their actions really reflect that. Their share buybacks, their investment strategy, their expansion into international insurance markets, and their careful management of Markle Ventures.
Right. But we also can't ignore those challenges they're facing, especially in reinsurance.
Definitely something to watch closely going forward. Their ability to overcome those challenges will be a big factor in their long-term success.
Agreed. So what are your biggest takeaways from this deep dive?
I think their unwavering commitment to building long-term value stands out. Also, their disciplined approach to investing and their ability to generate great returns even when things are tough. But yeah, that reinsurance situation, that's a big question mark.
Great points. And I think it's important to remember that Markle's not a stock for short-term traders or people looking for quick profits. They're building something for the long haul. Their success is going to be measured over years, not just a few months.
Absolutely. And for investors who understand that and have that long-term mindset, Markle could be a fantastic opportunity.
Totally. Okay, before we wrap up completely, I want to leave our listeners with a thought-provoking question.
Ooh, I like where this is going. Hit me with it.
Given how focused Markle is on building real value over short-term stock gains, do you think they're positioned to be a long-term outperformer?
That's a really good question. It's going to be interesting to see how it all plays out.
Absolutely. All right, with that, we'll wrap up our deep dive into Markle Group's Q3 earnings call. Thanks for joining us on Talk Tickers. You know, one thing I always find interesting about Markle is their CEO, Tom Gaynor. He's been there forever, it seems like.
Yeah, he's been at the helm for a long time.
He's not your typical Wall Street guy, you know?
He's definitely got a different style. It's refreshing, actually.
Yeah. It's like he's playing a different game, one where patience and building something real matters, not just chasing quick profits.
I think that's a great way to put it. He's focused on building a legacy, a strong company that's built to last, and that trickles down to the whole culture at Markle, you know?
It really does. It's like a different breed of company.
Definitely.
Now, let's talk more about their investments. We touched on their stock portfolio, which is obviously doing great.
Right.
But they also have investments in other areas too, right?
Oh, yeah, absolutely. They've got fixed income, real estate, private equity. They're pretty diversified.
So they're not just betting on one horse, so to speak.
Exactly. And they approach all of their investments with the same long-term perspective. It's all about finding value and holding on for the ride.
It's like building a fortress,
Yeah.
right? One that can withstand any storm.
Exactly. And that diversification has been key to their success. It helps them navigate those inevitable ups and downs in the market.
It's that slow and steady approach again, right?
Yep. And I think it's a smart one, especially in today's market. It's so easy to get caught up in the hype and the short-term swings.
So true. Now, one thing that people often talk about with Markle is their valuation. Some people think their stock is overpriced, while others think it's fairly priced, considering their growth potential and their unique business model. What's your take on that?
Valuation's always tricky, right? There's no easy answer.
Right.
But I think with Markle, you have to remember, they're not like other companies. They've got this unique combination of businesses, a great track record, and a management team that's proven they can handle tough times.
Yeah, you can't just look at their PE ratio
Yeah.
and make a decision.
Yeah.
Right. You have to look at the bigger picture.
Exactly. You have to factor in their growth potential, their diverse businesses, and their long-term vision. And when you do that, I think Markle starts to look pretty attractive.
Okay. Yeah, I see what you mean. Now, before we wrap up, I want to go back to the question we posed earlier.
All right, the big one.
Considering Markle's focus on building real intrinsic value, do you think they're set up to be a long-term winner?
Well, based on their history, their strategy, their leadership, I'd say the odds are definitely in their favor. But of course, nothing's guaranteed in the market, right?
True, true. Nobody can predict the future, but it does seem like they're doing everything right. Building a solid foundation, spreading their risk, investing wisely, and sticking to their plan.
I agree. And if you're an investor who's willing to be patient and focus on the long term, Markle could be a great addition to your portfolio.
Well said. All right, folks, that's our deep dive into Markle Group's Q3 2024 earnings call.
Hope you enjoyed it.
We always encourage you to do your own research and come to your own conclusions, but hopefully we've given you some food for thought.
That's what it's all about, asking the right questions and thinking for yourself. That's how you become a better investor.
Absolutely. And remember, investing is a marathon, not a sprint.
Couldn't agree more.
Stay focused on the long term, tune out the noise, and put your money in companies you truly believe in.
Great advice.
Until next time, this is Talk Tickers, signing off.